Hello everyone, welcome to Tesla Daily News. Today is May 21st, Thursday, and the following is the latest Tesla news. According to the latest market data, Tesla closed at $417.26, up sharply from the previous close of $404.11. The session opened at $407.60, traded as low as $406.39, and reached an intraday high of $417.46, meaning Tesla finished almost exactly at the top of its daily range. Volume was 45.08 million shares, showing solid participation behind the move. The one-line technical read is, bullish breakout, close near high confirms momentum above previous resistance. For investors, the most important point is not just that Tesla rose, but how it rose. A close near the high often signals that buyers remain active into the end of the session rather than fading the rally. That can matter for short-term sentiment, especially when Tesla is trading around major narrative catalysts such as Robotaxis, autonomous driving, China competition, and Cybertruck demand. Still, a strong day does not remove execution risk. Tesla remains a stock where valuation depends heavily on future growth expectations, autonomy progress, and confidence in Elon Musk's strategic roadmap. So today's price action is encouraging for bulls, but the next meaningful driver will be whether the company can show real operating progress in the areas investors care about most: vehicle demand, margins, autonomous driving, and artificial intelligence-driven transportation. According to Bloomberg, Tesla has started a new hiring push for self-driving and driver assistance roles in China, a move that deserves close attention from investors and Tesla enthusiasts. Bloomberg reports that Tesla posted urgent openings for autopilot test engineers, data labelers, and real-world test operators across major Chinese cities, including Beijing, Shanghai, Wuhan, and Guangzhou. The timing is important because China is Tesla's most competitive electric vehicle market and one of the most important regions for the company's long-term autonomy ambitions. Local rivals such as Xiaomi and Huawei-backed systems are moving quickly, and Chinese consumers are increasingly comparing electric vehicles not just on range and price, but on smart driving capability. For Tesla, a deeper self-driving operation in China could serve several strategic purposes. It may help collect and process local driving data, improve localization of driver assistance features, support regulatory engagement, and accelerate the rollout of advanced functions that have faced delays. From a stock perspective, this is one of the highest value stories in today's news flow because it connects directly to Tesla's premium valuation. Tesla is not valued like a traditional automaker. It is valued partly on the belief that software, autonomy, and embodied AI can create much larger profit pools than vehicle hardware alone. If Tesla can successfully expand advanced driver assistance capability in China, it could strengthen demand, defend market share, and improve the software story in a region where price competition has been intense. However, the risks are equally clear. Hiring is not the same as launch approval, and local competitors are not standing still. China's regulatory environment, mapping requirements, data rules, and competitive pace all create challenges. For enthusiasts, this is a sign that Tesla is still serious about making its vehicles smarter globally. For investors, it is a reminder that Tesla's autonomy narrative is now a global execution race, not just a North American story. According to Bloomberg, Cathie Wood of ARK Investment Management said Tesla and Robotaxis are about to take off, arguing that the largest revenue-generating opportunity from embodied AI will be in transportation. This is a familiar but still market-moving theme because ARK has long framed Tesla not primarily as a car company, but as a potential autonomy platform. Wood's comments reinforce the bull case that Robotaxis could transform Tesla's economics if the company can deploy self-driving vehicles at scale. The logic is straightforward. A privately owned car is used only part of the day, while a robotaxi fleet could generate revenue for many more hours, potentially turning vehicles into income-producing assets. If Tesla were to operate or enable a large autonomous ride-hailing network, the revenue opportunity could be far larger than standard vehicle sales. That is why robotaxi commentary often has an outsized impact on Tesla sentiment. For stock investors, the key question is how much of this opportunity is already priced into the shares. Tesla bulls see autonomy as the reason Tesla deserves a technology-style multiple. Skeptics argue that robotaxi timelines have repeatedly slipped, regulatory approvals remain uncertain, and technical edge must be proven in real-world deployment at scale. Cathie Wood's optimistic comments therefore matter less as a new data point and more as a signal that the high-conviction autonomy thesis is still alive among influential growth investors. For Tesla enthusiasts, the appeal is obvious. Robotaxis represent the most futuristic version of the Tesla mission, combining electric vehicles, AI, data, and potentially a new transportation network. For investors, the prudent approach is to separate vision from milestones. The milestones to watch include supervised and unsupervised driving performance, regulatory permissions, insurance and liability structure, fleet economics, and actual customer adoption. If those pieces begin to fall into place, the market could reward Tesla significantly. If they do not, robotaxi optimism may remain a powerful story without becoming a near-term earnings driver. According to HNA, Tesla's Cybertruck is facing renewed questions about demand after industry estimates suggested a steep decline in sales and after another small recall drew attention to production and quality concerns. The report cites Cox Automotive and Kelley Blue Book estimates that Cybertruck sales reached about 20,237 units in 2025, down from an estimated 38,965 in 2024. It also notes that first quarter 2022 U.S. sales were estimated at 10,000 units. These figures are difficult to verify because Tesla does not break out Cybertruck delivery separately in its quarterly reports. Instead, the company groups Cybertruck with other lower-volume models under the broader category of other models. That lack of transparency makes third-party estimates especially important, but also imperfect. The latest recall mentioned by HNA involves 173 Cybertrucks from model years 2024 through 2026 equipped with 18-inch steel wheels. According to the report, the U.S. National Highway Traffic Safety Administration warned that vibration in cornering loads could stress the brake discs around the wheel studs, potentially creating a risk that tires could loosen. Because the recall covers a very specific subset of vehicles, experts cautioned against using the small number as a direct measure of total demand. Still, it adds to a broader pattern of Cybertruck scrutiny. The Cybertruck was once expected to become a high-volume, highly visible symbol of Tesla engineering. Elon Musk had previously discussed potential annual production capacity of around 200,000 units, and even higher in optimistic scenarios. But the current demand picture appears far below those early ambitions. For investors, the Cybertruck issue matters for several reasons. First, it affects Tesla's brand image. The vehicle is one of the most recognizable products Tesla has ever made, and its success or failure shapes public perception. Second, it affects factory utilization and product mix. If Tesla designed production expectations around much higher volumes, weak demand could pressure efficiency. Third, Cybertruck pricing and positioning reveal how much appetite exists for expensive, unconventional electric trucks. The broader electric pickup market is mixed. HNA notes that Ford F-150 Lightning and Rivian RET sales have also declined, while Chevrolet and GMC Hummer electric trucks have improved. That suggests the issue may not be Tesla alone. Electric pickups remain a difficult category, with buyers weighing range, towing, charging, price, and practical use cases. But Cybertruck also has unique challenges, polarizing styling, quality concerns, recall headlines, and a high purchase price. Enthusiasts may still love the vehicle's stainless steel design, performance, and cultural impact. Investors, however, will want evidence that Cybertruck can become more than a niche product. Until Tesla provides clear model-level delivery information, the market will continue to rely on registration data, recall counts, and third-party estimates to judge demand. According to Newsday.com, Tesla has drawn criticism after publishing a social media video demonstrating that power folding seats in the Model Y can detect an obstruction, represented by a toy rubber duck, and reverse to avoid damage. The timing of the video created controversy because it came only weeks after a young child in the United States was tragically killed by a faulty electric seat mechanism in a Hyundai Palisade. Australian motoring journalist Paul Marrick criticized the post as being in very poor taste if it was intended as a selling point following the tragedy. Tesla Australia said the video was meant to demonstrate that the seats and boot react to an obstruction, reducing the risk of personal injury. This story is not as directly financial as autonomy hiring or Cybertruck demand, but it still matters because Tesla's brand is inseparable from safety, software, and public communication. Tesla has historically marketed safety as a major advantage, often emphasizing crash test performance and active safety features. Demonstrating obstruction detection can be a legitimate safety message. However, tone and timing matter, especially after a fatal incident involving a competitor's vehicle. For investors, brand perception can influence demand, especially in family-oriented vehicles such as the Model Y. The Model Y is one of Tesla's most important products globally, and family buyers often prioritize safety, reliability, and trust. A safety demonstration that is perceived as insensitive can distract from the technical point and create reputational risk. For enthusiasts, the technology itself is still worth noting. Obstruction detection in moving seats, trunks, and powered closures can prevent injuries and property damage, and Tesla's software-first approach allows these user experience details to be showcased easily. But the surrounding conversation shows the challenge of being a brand with a highly active online fan base. Some social media users reportedly used the video to attack Hyundai and make harsh comments about the tragedy, which amplified the backlash. Tesla benefits from passionate supporters, but that passion can also turn routine product communication into controversy. The practical takeaway is that Tesla's safety technology remains a selling point, but communication must be handled carefully when real-world tragedy is part of the broader news context. According to NDTV, Indexed HR, and La Raison, a Tesla Cybertruck owner in Texas was arrested after driving the vehicle into Grapevine Lake to test its Wade Mode feature, causing the truck to become disabled and take on water. Multiple reports describe the same incident. Police and fire crews responded near Cathie Wood's boat ramp after the Cybertruck became partially submerged. The driver reportedly told police that he intentionally entered the lake to use Wade Mode. Passengers exited the vehicle, and a water rescue team assisted in removing it. Authorities said the driver was arrested for operating a vehicle in a closed section of a park or lake, and reports also mention water safety equipment and registration-related violations. Tesla's owner's manual describes Wade Mode as a feature for driving slowly through shallow water, such as rivers or streams, with a maximum depth of about 81.5 centimeters. The manual also warns that drivers are responsible for judging water depth and that water damage or water ingress from driving through water is not covered by warranty. This story is partly viral entertainment, but it also has real implications for Tesla's product messaging. The Cybertruck has long been associated with bold claims, extreme capability, and futuristic toughness. Elon Musk previously suggested the vehicle could be sufficiently water-resistant to function briefly like a boat in certain contexts. Even if such comments were not formal operating instructions, they helped shape public perception. When owners interpret the vehicle as capable of lake crossing, Tesla faces the risk that marketing mythology collides with practical limits and legal rules. For investors, this single incident is not financially material on its own. But it contributes to the larger Cybertruck narrative. The vehicle attracts attention, but sometimes the attention is negative or distracting. For enthusiasts, the lesson is simple. Wade Mode is not a license to treat a Cybertruck like a boat. It is designed for controlled, shallow water situations, not for driving into lakes, strong currents, or unknown underwater terrain. The incident also reinforces the importance of reading the owner's manual and understanding warranty exclusions. The Cybertruck remains one of the most attention-grabbing vehicles on the road, but its capabilities have boundaries, and pushing beyond those boundaries can be expensive, unsafe, and legally risky. According to the broader set of reports today, the main Tesla story is a contrast between powerful future-facing optimism and near-term product execution challenges. On one side, Tesla shares showed strength. Autonomy hiring in China points to serious global self-driving ambitions, and Cathie Wood's Robotaxi comments reinforced the view that transportation could become one of the largest markets for embodied AI. On the other side, Cybertruck demand questions, recalls, the lake incident, and safety message controversy show that Tesla's real-world execution remains under close scrutiny. For investors, the highest value signal may be the China self-driving hiring push because it connects directly to Tesla's ability to compete in the world's most advanced electric vehicle market. The most important valuation narrative remains robotaxis and autonomy. The biggest product concern remains Cybertruck demand and quality perception. And the clearest short-term market signal is today's strong close near the session high. Thank you for listening to Tesla Daily News. If you found this episode helpful, please subscribe and stay tuned for the next update.